We are heading into the last peak week of earnings season with retailers taking the center stage. Joining us now to do a deep dive is Christine Short, Wall Street Horizon Vice President of Research, and Oliver Chen, TD Cowen Senior Research Analyst. So, Christine, let's get right to you. What are you anticipating most from retail earnings in the week ahead?
Yeah, well, it depends who we're talking about. It's going to be a mixed bag, as it often is. But there's four key areas we're looking at for this week, and that's the home improvement retailers, the discount, off-price, and fast fashion e-commerce. Of course, as you know, for home improvement, that was sort of a darling coming out of the pandemic with Home Depot and Lowe's, everyone kind of rushing out and, making large ticket purchases of appliances and doing DIY projects in their houses. And this has sort of softened, right? We're not as home as much, and inflation and higher interest rates have crept in. So folks aren't as willing to take on those large projects as they once were. And you can see that in analyst estimates. Home Depot and Lowe's expected to be down year over year on both profits and revenues. Next, I think discounters and off-price are two areas that are going to be winners this week. So on the discount front, you've got Walmart and Target. If I had to pick a winner, Walmart's really been outpacing Target. They're expected to be up year over year on both top and bottom line. Target is expected to see profits fall about 19%. Why? Well, Walmart has a larger share of the grocery space. We know everyone's really been focused on staples. If you get someone in for their groceries, perhaps they look around and they shop more. Also, e-commerce. Walmart's really just, hit it out of the park when it comes to e-commerce post-COVID. And they're also not only retaining their regular customer base, but they're getting higher income customers that are trading down. Same with off-price. We have Ross Stores and TJX companies out this week. This space has been really hot, right? Because those that are not maybe typically shopping there are starting to trade down. They're looking for bargains. They're looking for value. And both of those names are expected to do well. We've seen even the department stores like Nordstrom and Macy's really focus on their off-price segments. And then just lastly, fast fashion. We're looking at Boohoo. That is a British e-commerce retail loved by Gen Z and TikTokers. They own brands like Pretty Little Things and Nasty Gal. They haven't been doing so well. Yeah. We have an indicator that shows they push their earnings date back actually 2 weeks later than usual. Academic research shows when you push your earnings date back too far, it's usually positively correlated and highly correlated with bad news coming on the call. That wouldn't be surprising. They already said in their first half call that sales would likely be down 10% this year. And we saw what ASOS reported last week. ASOS is cutting costs and struggling with profit margins as well.
Yeah, certainly some worrisome trends. Oliver, let's drill down into Walmart. It's one of the big reports that we will be watching this week. I know you cover that name. What are you expecting just in terms to see some of the trends? Because consumers have been trading down and have been going to Walmart.
Yeah, Shauna, it's great to be here. The big story here is value, save money, live better. What Walmart does really well is everyday low prices. Also, about 60% of the assortment is food and essentials. That's been a category that's been working due to both inflation and as well as Walmart offering exceptional value. Walmart's also tech-enabled. So it's save money and people, but it's about technology too. And Walmart Plus, their membership program, has 24 million members based on our estimates. That's getting more high-income shoppers. And what's happening is this new generation of omni, meaning curbside pickup, buy online, pick up in store, and really flexing up on convenience. Higher household income customers, as well as value-seeking consumers like Walmart. Conversely, at Target has more discretionary goods. Think home, think apparel, think Target. A smaller percentage of Target is food. So we're watching these trends. Discretionary is very difficult to be in right now, given the inflation trends and given the pressure in the economy. However, on the positive side, the consumer's mixed. There's over $900 billion of savings on the sidelines and unemployment low at 3.4%. So there are cross currents with the consumer. The bottom line is all consumers are looking for value, and that's a key theme that we'll see. We also like very premium luxury goods. Our top idea here has been LVMH.
All right, Christine, I want to bring you back into the conversation here and talk about kind of the macro perspective. We've got retail sales out tomorrow. We talked about some key names in focus this week, of course, Walmart, Home Depot, et cetera. What are you looking to come out tomorrow, and is there anything that would surprise you?
Yeah, look, right now, the expectation is that retail sales are going to rebound from March. We're looking at the April reading. By how much, we don't know. In X autos and gas and building materials, it's actually expected to be only about maybe a 0.3% increase. We'll see. I mean, a lot of the consumer data that we've seen recently isn't looking so good. If you look back on Friday, University of Michigan consumer sentiment prelims came out and dropped 6 points. The reading dropped 6 points, showing that consumer confidence is waning. And you just mentioned the debt crisis. That is something that consumers are acutely aware of. Not only have we been talking heavily about a potential recession, whether that be mild or moderate, happening towards the back half of the year, that's something investors have, or consumers have been concerned about. But now they're worried, what if we default on national debt for the first time in history? What does that do to jobs? What does that do to retirement benefits? So they're acutely aware that that could be catastrophic. I think some other numbers we're looking at are Bank of America's credit card spending was, at its lowest level in 2 years. We had New York Fed out with consumer debt at the highest level ever today. And that wasn't from mortgages. Mortgage originations were the lowest they've been since 2014. Oliver talks about jobs. Yep, jobs numbers have been one of the steady things that has kept consumers resilient in the face of inflation and increasing interest rates. And we've been talking about that for the last year. But I think you're starting to see that waver a little, especially with initial claims out last week. Ending the week of May 6th, initial claims were at their highest level in a couple of years. And so you're starting to see the jobs picture break down a little bit. And when you look at some of these sentiment surveys, you can tell consumers are starting to think about that. And I think they're trading down, and you're going to see that in some of the retail results this week.
Oliver, you mentioned luxury
to build
retail.
On Christine.
Oh, go ahead, Oliver.
Consumers are becoming more choiceful. So what we're seeing is volatile traffic trends and consumers pausing and also delaying. On the other hand, parts of luxury goods remain very robust as the whole world goes out again and travels. Think about handbags, think about beauty and wellness and health being the new wealth as very good key themes to pay attention to for the long term. Also, what's really important for investors is, which stocks have pricing leverage. And there are stocks like Louis Vuitton and Dior that are able to price despite this difficult mixed environment.
Yeah, Oliver, I was curious just about LVMH, why that is a top pick within your coverage list, given the fact that we really have seen strength across the board, it seems like, when it comes to a number of these luxury names.
Yeah, what we're excited about is the gradual reopening of China. It's a key positive. The Louis Vuitton flagship brand has done a great job being very culturally relevant with Virgil Abloh and Pharrell Williams. Also, they've been able to achieve very nice price increases. Lots of people around the world love Sephora too. It's a phenomenal beauty concept. It's about 20% of the business. And Louis Vuitton is the largest market cap company in Europe. So what that really means, quite simply, is they have $7 to $8 billion of advertising and promotional dollars to spend. And big can get bigger in the context of that, because what happens is, I teach a class at Columbia University called Magic and Logic. Part of luxury innovation is magic, and that has to do with spending money towards making these highly emotional flagship experiences too. So these are very sustainable brands for the next hundreds of years. And that's why LVMH has been an attractive idea for us. We also like Costco, keep in mind, as we think about the bow tie approach and going high and going low and being selective.
Well, Oliver, it's so interesting that you mentioned that, because that's one of the things I thought about, especially because, Christine, you mentioned the possible headwind of a potential recession and what that can do to the consumer. Christine, let's ask you really quickly, and then Oliver, if you want to chime in. I think we know your answer, Oliver, but who are the winners in this environment with the pressures facing the consumer?
Well, like I said, certain discounters, Walmart, and then I would say the off-price retailers are those that have an off-price segment. I'd also say leisure is still strong. Oliver kind of mentioned that we've seen good numbers from restaurants. We've seen good numbers from the airlines. Maybe not necessarily for Q1. Some of the international carriers reported numbers that missed or weren't as good as expected. But if you look at bookings going out into the summer peak travel season, bookings were, a lot of them showing record amounts of bookings. And we've seen that with even some of the hotels, Hilton, Marriott, maybe not necessarily Airbnb. They came in lower than expected when they reported for Q1, but some of the hotel chains really still doing well. We see a consumer that is transitioning more of their discretionary income over to experiences, maybe away from things in certain scenarios. And I think that's still the impact you're seeing from the pandemic. People don't want to miss out anymore, so they're willing to spend on certain things.
Oliver?
Yep. It's all about bricks and clicks and even portals and AI as we think ahead. Walmart's very well positioned. When you think about artificial intelligence, one of the key aspects of this is the training models, which very simply means Walmart has a lot of data, which they can really harness for the membership program. That's something we're excited about going forward. Thinking about Costco, it's back to basics. Everybody loves Costco, and there's lots of things you find there that you never knew you wanted in that treasure hunt. It also offers exceptional value. And then LVMH is a top idea. As I mentioned, the scale, the cultural relevance, the real dominance in luxury goods is very impressive. So the barbell approach is the theme. Go high, go low, think about value. And we're watching the U.S. consumer, which continues to be fairly volatile, but we are in a consumer discretionary recession. So we've seen negative trends in discretionary. The bright spots are beauty, health, and wellness. I think health will be a great structural trend to follow, everywhere from physical to mental to being beautiful. And then TikTokification, that's another thematic thing we're paying a lot of attention to. I think Gen Zers will think very hard about sustainability as well as short form video for the long term. So lots of excitement in retail too.
Lots of excitement, that is sure indeed. And again, Gen Z trends, so important here when we talk about the future within retail. All right, Oliver, Chen, Christine Short, thanks so much.